Welcome to our weekend market analysis. I hope everyone has enjoyed their weekend. This analysis for November 29th, 2025. And it was a short week in United States, but it was pretty exciting. Well, one of the main things, the catalyst for this exciting week was we had a few Fed members speaking, and they were this rate cut enthusiasm, and there was a lot of excitement. Now there's about 89% chance that the Parliamentary thinks that the rates will go down in their December meeting. One thing, of course, that the Fed pays attention to is our inflation numbers, the PCE that will be coming up this coming week. So be aware of that. Also, last week, I mentioned that the markets were oversold and they usually bounce from that area, that zone. And also, we generally have a pretty positive pre-holiday United States. We had the Thanksgiving holiday, and markets like to go up, especially on Wednesday before, and they like to go up the Friday after. So we had that bounce, and the volatility had a crash, of course, because of this enthusiasm. So as I mentioned, Friday, what we want to pay attention to is we have the core PC price coming up, and also we have the preliminary University of Michigan consumer sentiment. So be aware of that. And as we can see is what you can pay attention to is the yield that the long end has been converging between last month and this month, but the yields for this month, for November, is actually lower than what it was in October. So, what kind of markets we had? Well, the markets obviously had a nice bounce. Overall, the markets were up almost 4%. That was a big bounce again. This was an oversold bonds, and we are back to more of a positive mode now. As you can see, everything was up, especially the small cap growth. They were up 6.4%. So for the week, we see the big winner was in the semiconductors. The SMH index was up 8%. And then we look at the basic industrial and we look at the retail and Russell also. Russell was up 5.47%, and the Max 7 was up 5.2. The Nasdaq 100 QQQ was up 4.88%. Then we see the S&P was up 3.64%. So, and the bonds were up 0.86%. The cyclical side was up 2.55%. Now, what you see is the risk on was up 4.48% versus the risk off 2.15%. So we see overall everything was really up. So when we look at the indices, we see the Dow Jones Industrial. Well, last week they broke below their 50 and 20-day average. They have bounced back nicely. The same thing with S&P. So that 50-day did not hold. We bounced back. Nice moves in Nasdaq. We look at Wilshire 5000. Also, the yields reverse and they were now below their 50 days, which is obviously bodes well for the markets. The dollar is actually floating around its 20-day moving average. And then we see the commodities also bounced. Again, we see the dollar after going up. It was down the last 2 days, Wednesday and Friday were the open markets, even though it was a half a day on Friday, but Thursday was closed. And then we see the crude oil was down and then up for the last 2 days again, but right touching this 20-day moving average. Gold had a nice bounce of its 50 of its 20-day moving average, and we see this again this big crash of volatility. We broke below the 20 and 50. And of course, that's the reverse of exactly what you see. Look at again, the mirror, the opposite mirror image. Um, when we look at the sectors, we see again S&P compared to S&P, the discretionary is broke above their 20 and 50-day moving average, although barely. The same thing with communication. Now, technology is, now this looks like a dead cross, not quite yet, but it's still that resistance. So we want to clear that. We see the industrial, we see the basic material, uh, and then the energy above its 20 and 50 days. So that, again, staples, even defensive side had a nice bounce. Of course, healthcare has been a hero, and they've been up nicely, bouncing off the 20 and 50-day. Utility is the same, the financial is the same, and even real estate did bounce over its 50-day moving average. When we look at internationally, you see again, there's a lot of positive movement. Again, past week, you can see they followed United States markets. Again, these big, nice candles in all of the indices. Sentiment, believe it or not, it hasn't really improved that much. And so there's still wall of worry. We are 32% in AAII members positive bullish and 42.7% still bearish, which is way above the average. Also, we see the fear and greed last week. Remember, we were in the extreme fear, and that was psychological bounce we talked about last week. We're still in that extreme fear, so that could fuel more movement. But this delta market sentiment, the stocks above their moving averages, we are at 41.2%. So technically, uh, there has been some damage done. So we'd really like to go back above the 50%. When we look at the charts, I have mentioned about again that 50-day moving average, how important that is. And last week we actually came back and bounced above the 50 and 21 and the 8. So that was a positive week. And when we look at the Fibonacci, we talked about this zone of 66, 63. We went down. Again, we look at the confirmation bars and then look at this past few days, what has happened. And we went back above that 68.21 zone, which was in 138.2%. From the Look at the Bollinger Bands, we see that bounce off the 100-day moving average. Also, the lower edge of Bollinger Band, we were oversold and now we are overbought. So be aware of that. So Monday's coming and we might be a little ahead of ourselves. As far as NASDAQ, similar, bouncing off that 100-day moving average, overbought, although MACD is true go positive. We see the Russell again, it was down, it was the weakest under the 100. It was oversold, and then boom, we came back up now, hitting the upper edge of the uh, Bollinger Band, but also the resistance. And then the same thing with Dow, bouncing up its 100-day moving average, overbought. Uh, we see the transportation, overbought, and we went outside Bollinger Band, came back in. The opposite is on VIX. We went outside. I mentioned to you when we are outside, come back. That's positive for the markets. Overbought. And then MACD has crossed now. But now it was overbought. We had that crash. But now we are oversold. So we'll see if the next 2 days that will be continuing and embedded, or are we going to have a bounce? We are on a support right now in VIX, but look at the big crash on VVIX and way oversold. So we'll see if that going to bounce or it's going to stay around here, which again will bode well for the markets. The yields came down nicely. As I said, that was the culprit and the catalyst for the nice bounce we had, the enthusiasm. We had three Fed speakers, and they were all enthusiastic about rate cut. And Friday we had a little bounce, and we are oversold right now. As far as the 10-year note, we see the opposite. We went outside the Bollinger Band and then came back in. We are overbought though. And then the same thing with 30-year bonds, overbought, and we hit against the upper edge of Bollinger Band. The dollar, after hitting the upper edge of Bollinger Band and going above almost 100, we came down. We broke below the 18. And again, you see we were overbought. We worked that out, and momentum looks lower. And then when we look at euro, is the opposite, and the momentum is positive now, and we broke above the 18. And when we look at gold, had a nice bounce off its 18-day moving average. We are overbought though, and the MACD is flat. Silver hit all-time high. I mean, this is amazing move. And basically what we are now, though, we are overbought, although MACD is positive. We are outside the Bollinger Band, but Bollinger Band is expanding. As far as copper, again, nice move. We are touching the upper edge of Bollinger Band, but we also are overbought. As far as the crude oil, we've talked about this. This is a known world. Again, supplies coming in and the sanctions are not making that much of a big difference now. And there are a lot of, again, accommodation. So we are cleared that oversold situation, but we are right under the 18-day moving average. Bitcoin, we talked about that. It was oversold, and basically what you see is this was an amazing move. We talked about the Fibonacci and last week. We talked about so we're still not out of the zone, although we shaken up that oversold situation now, but we are under the 18-day moving average. The MACD is trying to cross, so let's see what happens. And speaking of that, that's why we look at the weekly. We see how we were below the 100-day and trying to see that 100-day, I mean 100-week, I mean moving average is becoming a major resistance. So we want to clear that. And after that, about 103,000 will be a major zone, and then 110, 109 to 110 zone. So watch for that. We are oversold, but becoming embedded. So watch for that. And also MACD is negative. Well, remember, this was a 3.5 day a week in United States with S&P, and expected move was about 145, and we went beyond that. I think it was like 250 points, almost two standard deviations. So we were way outside the expected move. The same thing with the Nasdaq, the same thing with the Russell, even more so. The same thing with the Dow. This, and then we come back to the 20-year TLT bonds. Well, it was positive, but right in the middle. And then we see gold also went outside its expected move. And we look at the silver, had a wonderful time and then went outside, came back. This is again, it's a ETF. And this is might not be. This is last week, so my apologies. That's why it doesn't look right. So let's ignore that. As far as financials, we see we were way outside the expected move. Energy, on the other hand, well, it stayed within window. It was positive. And then we have the crude oil right again within the zone. But Bitcoin, of course, had a big move and went outside this expected move. So with that, we won't have a trade of the week this week. So ROK has done, it has hit all its targets. So if you follow the seasonality, it has worked out. So with that in mind, wish you a wonderful weekend and a successful week ahead. Thank you very much.